Hello, my name is Mike Swanson, and I run the website WallStreetWindow.com. And the odds are you're watching this email because you just got an email from me telling you that I'm going live for a stock trading session as we head into the final 15 minutes of the close today on April the 8th, Thursday. It's now 3:45 p.m. and it's been an exciting week for me, and I think most people watching this video, because we're finally starting to see it happen. We're finally starting to see what we've been talking about together for the past several weeks come together. We're starting to see a gold breakout in mining stocks break out. Of course, some mining stocks have broken out ahead of the move in gold today. But let's go take a look at the charts. I've got to load them up so we can look at them together. We'll see what's going on with gold. We're going to see what's going on, uh, with the various stocks and the overall market as a whole, for that matter. So let's get cracking right here. So here I'm loading up Kitco. It's one of the most widely followed stocks for gold, and the price has cleared 1755 today, up almost 1%. We've been eyeing that 1750 resistance level now, really for I think 6 weeks, and it's happening as we speak. Now, of course, they're not going to be talking about that on Bloomberg. They're going to be talking about NFTs and crypto, with this epic move, or epic might be an exaggeration, but key move that I think is the start of something is a better way to put it in gold instead. They're talking about silly stuff. So let's click away from that. And I want to point out to you that here's the Robinhood account. We're up 0.61%. That's because not every position in the account is in gold. I've got REITs, I've got shipping stocks. I'm spread out. Only 4 positions in the account are in gold stocks. One of them bought last week when I last did a trade in this account, last did a video, in fact, and that was in KGC. We'll go look at KGC in a few moments. But also we got WPM in this account. We got FNV in this account, Franco Nevada, and um, in PAS, the biggest silver producer in the world. So things are looking good. But the thing about Robinhood and trading in general, most people, when they go and look to see what the markets are doing today, they focus on this, the gyration of the moment. In fact, they can be so caught up in watching this little gyration that they really have no idea what is really going on. So I could sit here and watch this thing tick up and down, watch my account here fluctuate. Uh, oh, it just went up a few pennies. What's it going to do next? And people get like that because they're fully invested in just a few positions and it gets very risky, or they're on margin or something extremely volatile and the fluctuations stress them out. And then they get caught up focusing on what else is fluctuating, in these top lists, instead of looking at the charts. And it's looking at the charts, and what they show are trends longer than a day. They can show you trends that are years in the making, and the shorter term trends, weekly and daily trends, and you could put them in context with the bigger trends. And when all of them come together, that's where the real trading happens that works. And that's what we're about. Now, this morning, I sent out, um, I did a blog post, sent out an email about it. Again, if you're not on the email list, you got to subscribe. Click the link associated with this video to get on the list. Then you'll get the update tomorrow and know when we're on another video. But I sent this out. Corn prices are going crazy and pig prices are flying. That's because that's what's happening in the futures market. Last week, Corn prices went up the most in over 30 years in a single day in the futures market. They went up so much that they halted trading. They went limit up. And of course, they've been going up since August. But we'll go look and see what they're doing today. This is a chart showing yesterday's data, and the price of livestock, cow, pigs in this major ETF that tracks them all is also, as you can see, be going up and up. This is because commodities have been going up. Unfortunately, it's probably going to lead to higher prices within weeks in the grocery store, but this is a part of a trend that's been going on since last year, when a secular low was made in the price of soft commodities. DBA is an ETF that I own in my big account that I got like over 10% of my money in it, in fact. But it made a secular bottom last year after having been in a bear market since 2011. So these moves in that limit up move, we must put in context with this chart. What does it mean? This is a major bull market that's likely to last for years because we saw the end of a bear market that lasted 9 years last year. What do you do in a bull market like this that's just in the first year? You buy on dips, and pullbacks to the 150-day moving average or the 200-day moving average. And that's how you get in. And we saw a pullback on this ETF to the 50 in March, and now, just made a new 52-week high. This got close to the 50-day moving average in March too. Now, yesterday, it made a new 52-week high. So we look at corn prices right now, today, they're going through the high of the other week. So I don't own this position, but corn prices are a part of that DBA ETF. But one of the reasons I point this out is this is why I remain bullish on gold and silver, because they are poised to benefit, as an inflationary investment for people to protect themselves from inflation, especially when interest rates are rising and bond prices or the value of bond funds are going down. So most Americans that got 30 to 50% of their money in bonds are losing money this year in those bond funds because bond funds are going down. Most have yet to do anything about that, but some large institutional investors, big money people, did, long time ago by shifting some money into gold and silver. And they don't care if gold and silver pulls back 10%. They were able to hold from that pullback from August to recently, when gold prices made a double bottom off the 1675 level that we saw talked about. And now this is using yesterday's data, so you can't see the action of today, but we're clearing 1750, which was the high also in March. So we made a double bottom, then broke through last week's high. That's why we bought KGC last week, which looked like a stock that was in position to break out ahead of gold and even the GDX ETF, and it did it. So we cleared 7, and it's trading at 745 today, and so is Franco Nevada. Also, Robinhood position in my Robinhood account. Look, it's rallying way ahead of gold. What's PAS doing? The silver stock looking pretty good, testing 34. What's WPM doing? It's cleared already. 40 was the high of March. We're already sitting right below 42, so we're already approximately 5% above that March resistance point. The leading mining stocks are breaking out, and silver are going up ahead of the market. This is an exciting moment. It's a moment where if you don't feel like you are invested, or you're not invested or trading, got trading positions at all, now's the time to take them on. Now's the time to get out of some of this Bitcoin and the cryptos in stocks that were lagging in March and still are lagging now, and move that into some of this stuff. What's a stock like that? Well, think about this. We saw the NASDAQ pull back over 10% in February and March. It was bad. And while that pullback happened, the S&P held up. In fact, the NASDAQ performed worse than the S&P 500, worse than the Dow. They're barely pulled back at all, whereas many of the big cap fad stocks got completely hammered and smashed in February, March, and the rest of the market barely pulled back at all. A lot of these stocks are still lagging. Those are the type of stocks that should be dumped, liquidated, and that money used to buy the new winners. New winners, they're talking about stocks poised to benefit from the reopening of the economy, stocks that are going in companies in a better position now for the next 6 months than stocks like this. Tesla is now a stock market laggard. Tesla fell from 900 to 600 and hasn't yet even been able to bounce back above the 50-day moving average. That's the blue line on this chart. Do you think Tesla is the company from this point on to the end of the year is going to have better revenue growth than Disney World, let's say, the theme park, or these mining stocks that the price of gold and silver are poised to rally and the bottom line is going to jump? And they've already been increasing their dividends last year, some of them this past quarter, even with gold prices not going up and just simply being stable from where they were in August. Tesla doesn't even pay a dividend. That's the stocks I like, ones that are growing earnings, growing dividends, and are in a position to beat the market averages. Not a stock like Tesla that doesn't pay a dividend at all. It's got questionable accounting and, just bad stuff goes on all around it. I don't want to get in it too much, but you can read the articles and find out. How does Tesla treat the workers at its plants? How does Tesla treat its customers that put money down to buy one of these vehicles to reserve it? And then what happens? And how does Tesla book that money as accounts receivable when they don't even deliver? That's things that have happened in the past. And what about the solar panel company that Tesla merged with to bail it out before it went bankruptcy because Elon Musk owns it? I don't want to get involved in stocks like that, but people were piling in because it went up, up, and up, but now it's a laggard. That's the real important point I'm trying to make. That's a lagging stock. Get out of that stock. There's many people that are going to watch this on YouTube because I typed Robinhood in the title, and I've got a Robinhood account. So like, this guy's got a Robinhood account. He's like me. I can watch this. But I'm not like you, or at least I'm not like most Robinhood traders, because I'm trying to get you and the Robinhood people to stop getting out of bad stocks and in what I think are good stocks. What are bad stocks? It's many of the stocks on this top 100 list. What's on the top 100 list? Tesla's number one. Get out of it. Get out of it. Sell it. Sell it. Buy KGC. Sell Tesla. Buy KGC. Buy Franco-Nevada. Look at this. Franco-Nevada's gone from 105 to 133. That's a 33% return, and Tesla is not up 33% from that move in Franco-Nevada from the past 4 weeks. Get into something beating this. What else do people in Robinhood own? Just at it. They're not all the stocks are bad. Don't get me wrong. Just because someone else owns it doesn't mean it's bad. But a lot of them are, and because people just chase this list, and then when stocks get to the top of the list, everyone's in it, and then it's not a good situation anymore. But one of the things that fascinates me is when we go down this list, how many gold stocks or silver stocks are on the list? Oh, we got to look at the ARK fund. I haven't seen one. I'm going down the entire top 100 list, and not one gold ETF, not one silver ETF, not one single mining position stock, nothing. I like to get in stuff when few people are in it, and then it can get up to the top of the list. That's like the marijuana stocks a couple years ago were red hot, and they started on the bottom, then came up to the top. I think that's what mining stocks can do, but they're not even not a single one has made the top 100 list. So that's why I'm going to keep talking about them. And I think, I can get some new people in and help them that way, get out of the laggards, get into some of the good ones. But let's look at that ARK ETF. So if you look at the NASDAQ 100 QQQs, even though the Dow and S&P have recently made new highs, this one hasn't, but it's not far from the high. But compare that to ARK, which is this fat ETF. Again, it was a top 100. Look at it; it's lagging. It's still way below the 53 moving average. In fact, it's got a chart identical to Tesla. This is what's happening to so many of these fad, popular stocks that were big winners last year. Then they crumbled in February and March, and they're still lagging. I think they should be sold and the money shifted into new stuff, better stuff, future winners, future leaders. So these are my thoughts as we, the closing bell just hit, I think. So let's see what the headlines are and what actually happened with the averages. S&P notched a record high, up 0.42%. Tesla's still way off that high. That's why I think you should get out of it. So a good day for the market. The VIX is down to 17. I guess, the VIX is going to go down to that 13 to 15 area. That's what I thought it was going to do in December. Then, I got worried when everything started dumping in March that wouldn't happen. But now looks like we're back on track for that to happen this summer. So we're probably going to maintain the current type of overall market trends. We're healthy, broad market averages, fad stocks lagging, some future winners that go up to help. So there's not really, nothing that, unusual happening in the news today. I don't think. So we're going to get away from that. And someone asked me, can I suggest some good Canadian gold silver ETFs? I don't really know what they are off the top of my head. I mean, GDX is the major one in the United States, obviously. Actually, I will mention one that I can't think of. But I own GDX. That's a gold stock ETF. I also own GDXJ. These are mining stock ETFs. But check out the Central Fund of Canada, or it's now called the Sprott Physical Gold and Silver Trust, which I also own a position. It owns both pure gold and silver, and it's going to have a listing in Canada. But type in the name, I don't know the symbol. Also type Sprott Physical Silver Trust, Sprott Physical Gold Trust. Actually, also have a position in PSLV, but they also trade in the Canadian exchanges. I don't know what the symbol is, but just type them in Google, and you'll be able to find them. But kind of a fun day. We'll see how this develops over the next week, but we're heading into earnings. It's another reason not to be too worried about the broad market at the moment. But I'm more excited about this because if gold simply rallies from here up to 2000, GDX is going to go above 45, I believe. And even if it doesn't do that, some leading mining stocks will, do great over the next several months. So these are my thoughts for today. And if you're just randomly found me on YouTube, click subscribe on the YouTube video. That'll subscribe you to the channel, and then click the bell, and then YouTube will notify you the next time I send out, or the next time I go live like this. And I'll be talking with you later.